When the financial pressures of the big bad world becomes too much, a change of career is often the best answer. But to do so usually requires further education and retraining, and the considerable financial investment it demands. But even when income is low and past struggles have resulted in a poor credit score, there are funding options available. Applying for student loans with bad credit is not necessarily a problem. For the most part, the students enrolling in colleges across the country have come directly from high school, but there is a growing proportion, especially the recently unemployed, who have opted to return school. Of course, such a move is dependent on getting loan approval, with college fees amounting to much more than small change. Unlike high school graduates, these older college-goers usually have an unimpressive credit history, and so it is understandable that complications in getting the student loan are generally expected. But the good news is that these loans are more accessible than is widely believed, mainly due to the special treatment that education receives, special financial arrangements. There are always conditions to getting a loan approved, with unsecured loans typically having the strictest. But student financing is considered different to other financing deals, so applying for a student loan with bad credit is simpler to qualify for. Firstly, the repayment terms in these loans are more lenient. The reason is that these students have returned to college intent on getting a better job, and lenders are willing to encourage that enterprise. After all, the student of today could be the millionaire of tomorrow. For students, getting loan approval is easier if they have committed themselves to a full-time college course. Secondly, credit scores are given no heed because lenders expect student applicants to have a poor score anyway. They are also likely to have a small income while in college, if any at all, and will not be able to meet a repayment schedule. The student loan is an investment in the future, so repayments are usually put on hold until graduation. Federal loan options. Of course, applying for student loans with bad credit is fine, but the right loan to apply for needs to be identified. The best terms are available from federal loans, with the alternative being the more costly private loan option. In both cases, there are set steps to take to start the process. Students seeking federal loans must fill out a free application for Federal Student Aid (FAFSA). From the information provided in this document, the lending authority can tell which federal loan an applicant is eligible for. These loans are available at very low, fixed interest rates. Repayments are not usually required until after graduation, but impromptu repayments can be made voluntarily at any time after getting loan approval. This all makes the federal student loan option the most affordable college funding option out there. But the loan must still be repaid eventually, and failure to repay will go onto the credit record, thus affecting your credit score and future loan options. Private loan options. Qualifying for federal financial aid does not necessarily guarantee the funding a student needs to survive in college. Often, extra funds are needed just to meet living expenses, making private lenders a vital resource for students. Applying for private student loans with bad credit are straightforward, but these loans do come at higher interest rates, so are more expensive. Private lenders are happy to provide periods of grace and interest-only repayments until graduation too, but keep in mind that some lenders expect the accumulative interest to be repaid. For example, if a student loan is granted 2 years before graduation, then 2 years interest will be charged from graduation day. So, while getting loan approval may mean much needed funds are secured, there's a greater level of pressure when repayments on these loans finally begin.